Hi, I am Michael from Jamaica, and in my head, I have the stock recommendations for your financial independence, man. Today's video is about Kirkland Lake Gold, one of the most effective gold miners in the world. There's a good chance that the KL share will double or triple in value in 2021, 2022. And as always, we conclude by analyzing the chart for technical entry signals. Hey, for the option traders among you, there are again some interesting proposals. Furthermore, I have pinned the name of the winner from the last video, Bitcoin raffle, above the comments on this video. And attention! Herewith ends this raffle. I would also like to draw your attention to the fact that we will begin a new video series in September in addition to our 10-bagger series. Yes, man, to show you that it is possible to achieve financial freedom even with a small account. We will open a $25,000 account. The development of the portfolio will continue to be supported by short-term trading strategies and the sale of put and call options. Hey, if you're interested in what happened to this account of $25,000 in 2025 and eventually in 2030, follow our trades and investment. I will gladly explain to you why we made which trade or investment. So, if this topic interests you, stay tuned. After the risk disclaimer, we continue. Yeah, man. Kirkland Lake Gold is headquartered in Toronto, Canada. The company has been tradable on the stock exchange since July 2015. You can read the corresponding trading symbols right above me. Is the KL share at 10-bagger? Probably not. A lot of unusual things would have to happen for the value of Kirkland Lake to increase tenfold, even with a time frame of 7 to 8 years. That is unlikely to happen. We don't want to give anyone the benefit of the doubt, but we think a doubling to tripling of the share value within the next 1.5 years is quite possible. Quite probable. Yeah, man, there is a lot to be said for this scenario. Why? Let's take a closer look at the company Kirkland Lake. With production costs of less than $850 per ounce, the company is one of the leaders in the industry. KL has no debt. This is very unusual in an industry as capital intensive as mining, and the company is sitting on a mountain of cash. As of the 31st of March 2021, KL has $792 million in cash reserves. The acquisition of Detour Gold was a smart move, the positive effects of which on the company as a whole will only gradually become apparent. And now another plus is that the company operates mines in Canada and Australia. Other competing companies also own mines in South America and Africa. This raises the risk of political upheaval and fiscal uncertainties, factors that can have a decisive impact on sales and earnings. The high quality location choice gives KL an edge over the competitors. The share is trading well below the average price / cash ratio of the last 5 years, and with a yield of 1.8%, this makes KL a compelling option in the gold mining sector. However, despite these overall outstanding conditions, the share is about 25% away from its highs. Why is that? Well, on the one hand, it is certainly due to the development of the gold price. I'll come back to that later. Secondly, the flight of many investors from the share. The flying ointment for many investors was the expiry of the Holt mine and the rising cost of Fosterville due to a lower production profile. But if we take a closer look at the overall results, we see that the Detour mine results alone more than compensated for the losses. Here, production increased by 60% year on year. Some investors also resented the high purchase price of $3.7 billion for the Detour Gold. The investors have not yet realized that the purchase of this mine is the company's key investment for the next 10 years. The Detour Lake mine has the potential to become one of the largest and most effective mines in the world. I am convinced that many investors will come back as soon as it becomes clear that the outstanding result of the Detour mines are not just a temporary phenomenon. The quarterly results this year gives us confidence, man. After the average forecast for the production and cost efficiency was already strongly exceeded in the first quarter of 2021, this development also continued with the results of the second quarter. The results are achieved through improved productivity, which enables more efficient exploitation of the mine. Before KL took over, average production at Detour Lake mine was 567,000 ounces at a cost of $1,080 per ounce. KL now expects Detour Lake to produce an average of 724,000 ounces between 2021 and 2025 at a cost of $775 per ounce. You see, while Fosterville is expected to face rising costs, revenues will increase not only at Detour Lake but also at Macassa. In the 2022 financial year, production in Macassa is expected to increase to 310,000 ounces. This figure is expected to rise to 412,000 ounces by 2023. You see, according to the company, it is doing everything in its power to make Macassa one of the largest and most cost-effective underground mines in the world. We see Kirkland Lake as an excellently managed company with a cost profile of less than $850 per ounce, making it one of the most effective gold miners in the world. This is underlined by the above-average transparency of the forecast published by the company. Even more impressive and not self-evident in this industry is how close the actual results are to the forecast values. However, like all gold miners, this company is also dependent on the development of the gold price. So, you see, the development of the gold price remains the decisive key element for forecast in this sector. Now, we at Stock Screener Island are certainly not experts in the development of gold price, but we have taken a look at the relevant expert opinions and we're amazed at how controversial the development of the gold price is forecast to be. While some see the gold price at $2,500 within the next 2 years, others fear a price collapse to below $1,500. Both parties have good and valid arguments for their respective theses. For those who want to do their own research, we recommend the blogs of Seeking Alpha and the Motley Fool. Yeah, man. But we feel connected to the bullish thesis, the inflation trend shown by these experts and the forecast development of the dollar index, including the Fed's most likely interest rate policy, seem plausible to us. All in all, we calculate a minimum price target of $76 by the end of 2022 for Kirkland Lake. From this point of view, the low of spring of this year at around $32 turns out to be an ideal buying opportunity. So, congratulations to all those who were able to take advantage of this buying opportunity. Please write in these comments, why you place your buy orders at the particular point. I'm interested in your thoughts that led you to this purchase. Well, now let's take a look at the chart. The daily chart shown here is obviously not very encouraging. On the 4th of August, the price began to correct strongly. Even though the market corrected lower than we expected, the overall picture remains bullish as long as the market can stabilize in the 38.60 and the 38 area. With the pronounced correction, the upward gap from the 29th of July was also closed, man. But Is this really as bad as it seems at first glance? Well, certainly not. There are favorable entry opportunities here for cool investors. Why? Let's take a look at the weekly chart. Here we see an inverse shoulder head shoulder formation, a bullish sign, even if the formation is still waiting for confirmation. Furthermore, a breach of the local high at 44.97 would establish an intact upward trend, another bullish sign, even if there is a long way to go. All in all, I repeat it again, the market is at a crossroads. If the price cannot stabilize between 38.60 and 38, the bullish chart technical formation will be of no use. Then it will continue to go downhill. Then the next target zone is approximately 32.20. So how do we at StockScreener Island trade this chart constellation? Unfortunately, our initial situation is not ideal as we are already invested. Since an option allocation, we have 100 shares in our portfolio and at a price of $45. However, since the neckline and the possible establishment of the upward trend also fall in this area, $45 would have been the area where we would have reasonably placed a buy order anyway. Now, we want to improve on our buy price of $45 and are using this option to do so. We will speculate that the price will fall below $39, and if there's a visible stabilization in this area, we will buy another 100 shares. For those who can tolerate risk, this part is a possible option. If you want to play it safe, you should place your buy order at $45 as described above. However, the whole fair weather forecast would be over if the price were to fall below the local low at 37.84. At the latest, then the chart would have to be reanalyzed for its bearish possibilities. Hey, as usual, we have picked two options for you. A long call option, 21st of January 2022, with a strike price of 35 and a cost of 700 per option. This option is interesting for all those who expect a price above $42 until January 2022. When selling the put option 15th of October 2021 with the strike price of 35, we have a lower purchase price in mind. And if that failed, there is the premium. There is still the premium of $80. Well, so much for Kirkland Gold. Have fun and good luck with your investment. Listener, if this video has brought you any intellectual added value, please leave a comment. We are also happy, to answer any criticisms or suggestions. Subscribe to our channel and benefit from our knowledge and experience on the way to your financial independence. Yeah, man. Hey, 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 hey.